Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner, Brian Johnson. And we had another move down today, about a 4% move down today in the markets. That's a lot of selling. However, most of it was in a gap again. So uh, if you got short way up in these areas, uh, you've been able to make really good money on the way down. It's been a little bit more difficult during options expirations week to hold one way or the other overnight. But all the volatility this week has been to the downside, which has made for some pretty easy trading in the bigger overall picture. Monday and Tuesday made for great intraday trading. Yesterday, not so good. Today, kind of mixed. I don't know. Kind of mixed for intraday trading based on what we saw. But towards the end of the day, very easy intraday trading, obviously, as everything just started to fall apart. Taking a look at the markets, you can see my breaks to the short side were really below all these levels down here. Some of this happened, most of it happened in these gaps, so we have to be very careful with that. Holding on to the 10,300 area. But I like the fact that 10,300 was one of my areas to get short. We gapped below it, came back up to basically test it today, come pretty close today to getting back up here and testing it later on in the day, which we saw on a lot of the other indices as well. One of my targets overall was the 200-day moving average on the Dow. I said I expected the Dow to see it over the next 2 days, and we just cut through it like butter today. Now it held there for a while, kind of danced around, but by the end of the day, look at this absolute shearing of the 200-day moving average. For the Elliotians out there, I've always liked this as a 1, 2, 3, 4, 5 count. I've been cautious to have the secondary count in place, which we all do, but I've really liked the 1, 2, 3, 4, and now this just confirms this 5 down for me. I really think this is another 1, 2, 3, 4, 5 down. So it looks very obvious to me from this standpoint as we just fall apart in the markets. The Bears are loving it. Revenge, revenge, revenge on the Bulls for all the work that they did the last few days. I'm going to go back here really, really quick and show you something, guys. Once again, how important is it to know how to play both the long side and the short side? Gee, you tell me. Look at these huge dips down in the market. This run down here, this run since the 10,900 mark up here. Look at how much more devastating they've been since the bull side. If you guys don't know how to short, or you're not comfortable shorting, or you don't know when to short, classes could have paid for themselves by now, over and over and over again. Consider them. It's well worth the investment. It's not just spending money, it's an investment in an education. And there's never anything wrong with an education. So, this huge rundown just absolutely destroying all the work that the Bulls have done since early February. We're almost back down to that level, and short of a bounce or some really big news coming out, really, 9900 is definitely in the sights now. There's just nothing to stop it from this point. Nasdaq on a 60-minute doing the same thing. I love seeing the gaps. I love the NDX for this reason. Remember I talked about 1840? I said break below 1840, look for that for a good short. Well, we gapped below it, came back up, and on the retest, look how high it went. 1839.30.99. I love TA. Technical analysis is awesome. So we saw heavy selling coming in after that. Move down in the markets. Nasdaq on a daily also coming down to test its 200. I was a little bit questionable on whether or not the Nasdaq would make the 200, but obviously no question about it today. With the heavy selling that came into the markets, the Nasdaq just dove right along with everything else. From a weekly standpoint, did look bearish yesterday. Didn't know what would happen before the end of the week, but you could see it's obviously on its way to the 50-week moving average. If it doesn't pull up a little bit tomorrow and get back above that upper support line. SPX on a 60-minute also continuing to fall, been one of the by far one of the more weak markets. This one tapping itself off the 200, and then today just absolutely crashing through all of it. So what are we looking at for a bottom? Yeah, this big green line down here. That would be a good area to be watching as we proceed into tomorrow. Any bounces? Looking for these lines above us to hold. But boy, it's got a lot of work to do now that it's below the 200-day moving average. That's a big close for the Bears right there. That's a major close for the Bears. From a weekly standpoint, already at the 50-week moving average. So Maybe we see it bounce down tomorrow, come back. It's anybody's guess really at this point. We'll wait and see how the weekly closes, but this is very bearish in through here. What we're seeing here is very bearish. VIX on a daily, I don't need to say anything else. Up 30%. That's huge. Lots of fear coming into the market. Where's my overhead mark? 50. So if you guys are looking for something to kind of base your trading off of, if the indices hit those lower levels or if the VIX hits this 50 level, whichever comes first, I'd start looking for a potential pause, break, bounce the other direction. So if the VIX hits 50 up here in this area, you might want to be cautious if you're short the market at that point. That might lead to a little bit of a bounce at that point. So if you guys want indication, this might be where you might find it. It's just something to go off of. Just something to give you, just at least gives you an idea of where things might happen to bounce. So watch the VIX. What this really just tells me is the fear is really starting to come back into the markets right here. This is a lot of fear coming back into the markets. Apple on a 60-minute down $10.50 today. I think we talked, well, mostly on this gap. So we talked about taking Apple short, how difficult it is to short it, but one of my targets was this 235 area down here. We hit a low of 236, so we're awful close to that. Now, there was a ton of support below Apple. What do? You gap below it. You just gap below it. Now Apple's, yeah, we're going to get below Big Blue here. And this is something that Apple's going to want to hold. It's going to want to try to get there tomorrow. If it can't, now you're looking at some work. Apple's going to have some work to do if it's going to continue higher in the bigger term. If not, 224, guys. 224 is the target down here on Apple. FAS also down 13% today, most of it on that gap to the downside, but you can see the FAS continue to fall apart. Some trading in here for those of you Mark that like to trade FAS and FAZ. You can see that there is some opportunities down here. Watch your lower levels. This is absolutely a target for me down in this area. FAZ on a 60-minute screaming upwards. My move was above 15. We got that on the gap up and saw nothing but a nice run up, pull back, run up again. So now from a daily, break up and over this, yeah, now we're talking about a potential swing trade in the FAZ, as much as I hate it. But now, look at this huge move, big close by the bulls, and not so good for the financials into here. So we're up above some pretty major resistance. There is some further overhead resistance right where we stopped today. Actually, the $17 mark. I don't have it marked in, but 17 is actually another overhead resistance area. So, I mean, we could see maybe a small pullback tomorrow, but any break up and over, 17, I'd really be watching it close to the long side. There might be some long opportunities coming into tomorrow's trading. It is Friday, end of the week, and I don't know if I'd want to be holding over the weekend based on the huge run the Bears have had. So you want to be cautious. If you've been short since the beginning of the week or close to the beginning of the week, you might want to take some of that before the end of tomorrow, just to save your profits. Next overhead target, if we continue to the upside, is the 1850 area. It's a long ways up, I know, but 1850 could very well be in the cards for FAZ as we push forward. All right, guys, big day for the Bears. Big week for the Bears. So if you guys have been short from up in here, you're doing very, very well. I don't know if I'd be to, I guess, all pun and not intended necessarily, but don't get scared out of your shorts. Don't get scared out of your shorts here, unless you're a bull. I'd be scared out of my shorts. Are we going to get a bounce? Yeah, we're going to get a bounce. When's it going to come? Nobody knows. It could be another week before we get a bounce. It could be tomorrow when we get a bounce. At this point, it's just a crapshoot. The 1, 2, 3, 4, 5 down that we've been watching from an Elliottian standpoint is it's justified now. It can bounce at any time and it'd be okay. There you go. That's fine. Whatever. But from a technical analysis standpoint, which is what I always default to first, always, it's these levels here. Back above the 200 days on all the indices, and these lower levels here are your support. All right, so we'll see you again tomorrow night for the end of the week wrap up. Thanks, guys. Bye.